Welcome back. A growing number of investors believe that U.S. stocks are overvalued, creating the risk of a significant bear market, according to research by Yale University market scholar Robert Shiller. My guest is Mark Henry with Alloy Wealth Management in Charlotte, North Carolina. Good to see you again. Welcome back, Mark. So since 2009, we have seen the equity markets triple in value. Are you on the bubble bandwagon right now?
Well, here's the first thing when you think about this quote market bubble. I hear it all the time. The question I would ask is, at some point, yes, the market is going to correct. Is it this year, next year, the year after? That's really not the question. The question is, have you structured your finances, have you structured your portfolio in a way that you know what would happen and what your plan is when it does correct? It's not a matter of if it's going to correct, it's when. So the point behind that statement is, do you have an exit strategy? Do you have a plan? Do you know what's going to happen? Is your money positioned in ways that this bucket of money, this is what we think will happen to it in the event of a big market downturn? This bucket of money, nothing happens to. This is my bucket of money that maybe is my cash reserves. And it's all proportionate to how much risk you want to take. So first off, when you think about a quote market bubble, forget that idea. Think about this. Do you know the amount of risk you're currently taking in your portfolio, and does it match where you want to be? What got people in trouble in 2008 was they had more risk in their portfolio than what they wanted. And so without an exit strategy, they saw it drop and drop and drop and didn't know what to do. There has to be a clear strategy. So are we on a market bubble? A lot of that depends on what happens in the future. But what I know for sure is, if you have a plan, the market bubble won't devastate you financially.
So right now, CDs and bond yields are delivering next to nothing. Talk about where we can go for safety and still get some growth.
Sure. So when you think about protection, growth, a lot of times people will be directed toward some form of an annuity. There's some really good fixed index annuities in the market that will allow someone to have principal protection and market growth. Some of them can actually have no fees. So those are pretty good options. One of the ones that I always advise clients to be leery of is the variable annuity. Because yes, you have market growth, potential market growth, but it also contains higher fees and risk of loss. So be careful when you're thinking about, if you want the money in the market, have it in the market. If you want it out of the market, look for an alternative, whether it is a CD that maybe doesn't pay as much, a fixed annuity, or maybe a fixed index annuity, but something that is completely free from market loss.
Well, finally, Mark, there have been some recent innovations that really make these products even more attractive. Can you talk about them?
Well, some of the innovations that have come along is they're following different indexes. It used to be that the annuities would follow the traditional Russell, the S&P, maybe it was the FE, the European indexes, but there's some now that follow some new indexes that actually have very stable indexes, and a few that come to mind that actually pay a percentage of the index that's greater. So uncapped used to be that your annuity was always a capped annuity, so which doesn't sound terrible because you got a floor of 0, meaning you can't go below that. And then maybe it had a 5% cap. So if the market rose, the index rose 6%, you would stop at 5. And you say, well, that's not a bad trade-off. But there's some innovations now where you actually have uncapped annuities with no fees. A lot of different options out there for clients. And again, that's where it comes in to have a fiduciary and somebody to go out and find those, an independent advisor that's not stuck in one little pigeonhole in one little box.
Great, Mark. Thank you so much.
Scott, thanks for having me on again.
That's Mark Henry in Charlotte, North Carolina. Thanks for watching Retirement News Online.